Preparing for FP&A at Sony interview? You've reached Candy Mentor, and this video is for you. We'll walk through 25 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does FP&A do, and how would you add value as an analyst at Sony? FP&A connects financial information with operating decisions. At Sony, I would support budgets, forecasts, monthly reporting, and variance analysis while learning how each segment earns revenue and manages costs. I would add value by making analysis accurate, timely, and commercially useful rather than simply producing reports. For example, I might explain whether a forecast change reflects volume, pricing, foreign exchange, or investment timing. That clarity helps leaders allocate resources and manage risk. While answering, focus on budgeting, forecasting, variance analysis, management reporting, business partnering, data quality, and translating financial results into decisions across Sony's diverse entertainment, electronics, and technology businesses. Question 2. Why do you want to work in FP&A at Sony? Sony appeals to me because it combines technology, games, music, pictures, and electronics, creating a complex environment where FP&A can genuinely influence decisions. I am interested in understanding how recurring revenues, content investments, product launches, and foreign exchange affect performance. The role also matches my strengths in financial modeling, communication, and structured problem-solving. I would enjoy partnering with non-finance teams and turning detailed analysis into practical recommendations for sustainable growth. Make sure to cover Sony's diversified portfolio, recurring and hit-driven revenue streams, global operations, innovation, analytical learning opportunities, and how your skills align with planning, performance management, and cross-functional collaboration. Question 3. What is the difference between a budget, forecast, and long-range plan? A budget is the approved financial plan for a defined period, usually establishing targets and resource commitments. A forecast is an updated estimate of expected results based on current performance and revised assumptions. A long-range plan looks further ahead, connecting strategy, investments, capacity, and growth expectations. At Sony, I would use the budget to measure execution, the forecast to support near-term decisions, and the long-range plan to evaluate strategic investments and portfolio priorities. In your answer, distinguish fixed annual commitments from rolling expectations and strategic horizons, explain assumptions and update frequency, and show how each tool supports resource allocation, accountability, and long-term decision-making. Question 4. How would you build a forecast for a Sony business segment? I would begin with historical actuals and identify the segment's key drivers, such as units, price, subscribers, releases, advertising, or licensing. I would layer in known initiatives, seasonality, FX assumptions, cost inflation, and input from operating leaders. Then I would build base, upside, and downside cases, reconcile the model to actual accounting data, and document changes from the prior forecast. Finally, I would challenge unusual movements and communicate the major risks clearly. Be sure to mention historical trends, operational drivers, management input, seasonality, pricing, volume, FX, scenario analysis, reconciliation to the general ledger, and clear documentation of assumptions. Question 5. How do you perform a meaningful budget versus actual variance analysis? I first identify material variances and separate timing items from genuine changes in business performance. For revenue, I would examine volume, price, mix, cancellations, and FX. For costs, I would assess headcount, rates, usage, and one-time charges. I would validate explanations with business owners and compare them with prior forecasts. The final output should explain the driver, quantify its impact, identify accountability, and state whether the forecast or action plan needs updating. Focus on materiality, favorable versus unfavorable variances, price-volume mix decomposition, timing, FX, one-off items, root causes, ownership, and recommended actions rather than merely describing numerical differences. Question 6. Which KPIs would you monitor for Sony's Games and Network Services segment? I would monitor console sell-through, digital and physical software sales, network subscribers, monthly active users, engagement, average revenue per user, bookings, gross margin, and content investment. I would also distinguish bookings from recognized revenue because timing can differ across subscriptions, digital products, and bundled offerings. The best dashboard would connect operational indicators to financial outcomes, showing whether user growth, pricing, mix, or release timing is driving revenue and profitability. In your answer, discuss hardware units, software sales, digital mix, active users, network revenue, engagement, bookings, margins, content investment, and the distinction between operating KPIs and accounting revenue. Question 7. If PlayStation hardware sales were below plan, how would you investigate the variance? I would first quantify the gap by region, product, channel, and week, then separate demand weakness from supply or shipment constraints. I would review pricing, promotions, inventory levels, launch timing, competitor activity, and foreign exchange. Next, I would assess secondary effects on software, subscriptions, accessories, and margin. I would discuss the evidence with sales and operations teams, update the forecast using explicit assumptions, and present management with actions and downside risks. Make sure to cover volume, region, channel inventory, pricing, product mix, launch timing, supply constraints, competitor actions, FX, downstream software effects, and forecast implications. Question 8. How would foreign exchange affect Sony's planning and performance analysis? Foreign exchange can affect transaction margins when revenues and costs are in different currencies, and translation when overseas results are converted into Sony's reporting currency. I would show reported and constant currency growth separately, identify exposures by region and currency, and run sensitivities for major exchange rate movements. I would also consider hedging policies without assuming they eliminate all volatility. This prevents management from mistaking currency movements for changes in underlying demand. Be sure to mention transaction and translation exposure, constant currency analysis, sensitivity tables, hedging context, geographic revenue and cost mismatches, and avoiding confusion between reported and underlying performance. Question 9. What revenue recognition issues might matter in Sony's businesses? Revenue recognition depends on what Sony promises, when control transfers, and whether multiple performance obligations must be allocated. Subscriptions may be recognized over the service period, while hardware is generally recognized when delivered, subject to contract terms. Licensing and content arrangements can involve usage-based or milestone-related timing. In FP&A, I would understand these rules well enough to explain timing differences, reconcile operational metrics to reported revenue, and involve accounting in judgments. Discuss timing, performance obligations, subscriptions, bundled products, licensing, content releases, contract liabilities, principal versus agent judgments, and collaboration with accounting under applicable reporting standards. Question 10. How would you analyze cash flow and working capital for a Sony business? I would bridge operating profit to operating cash flow, then examine receivables, inventory, payables, contract liabilities, content payments, and other working capital movements. For a product business, inventory buildup may signal a launch strategy or weak demand. For content or subscription businesses, payment timing may differ from revenue recognition. I would also review CapEx and investment spending. The objective is to explain cash conversion and identify actions that protect liquidity without harming growth. Focus on operating profit conversion, receivables, inventory, payables, contract liabilities, content spending, seasonality, CapEx, and separating accounting profitability from cash generation. Question 11. How would you evaluate a proposed capital expenditure project at Sony? I would assess strategic fit first, then model incremental revenues, operating costs, working capital, taxes, CapEx timing, terminal value, and risks. I would calculate NPV using an appropriate discount rate, review IRR and payback, and test downside cases such as delayed launches or lower utilization. Depreciation affects earnings but not directly the investment decision's cash flows. After approval, I would compare actual benefits and spending with the original business case. In your answer, cover strategic fit, incremental cash flows, NPV, IRR, payback, useful life, capacity utilization, risk, scenario analysis, depreciation, and post-investment performance tracking. Question 12. What is the difference between an income statement forecast and a cash flow forecast? An income statement forecast measures accrual-based revenue, expenses, and profit, while a cash flow forecast estimates when cash is received and paid. The difference comes from working capital timing, non-cash expenses such as depreciation, capital expenditure, taxes, and financing movements. A business can report strong profit while cash is tied up in receivables or inventory. I would therefore build both views and reconcile them so management understands profitability and liquidity together. Explain accrual versus cash timing, non-cash expenses, working capital, CapEx, financing flows, and why a profitable business can still experience liquidity pressure. Question 13. How would you decide whether a cost variance is temporary or structural? I would investigate the underlying driver rather than rely on the variance label. A one-time legal charge, launch expense, or timing issue may reverse, whereas higher salaries, supplier pricing, or recurring cloud usage may establish a new run rate. I would compare monthly trends, contracts, headcount, operational volumes, and prior explanations, then challenge assumptions with the owner. My forecast would separately identify temporary items and permanently revised cost expectations. Make sure to discuss historical patterns, run rate analysis, contracts, headcount, operational drivers, management explanations, one-time items, persistence, and the effect on future forecasts. Question 14. Which financial and operational metrics would you include in a monthly Sony management dashboard? I would include revenue, gross margin, operating income, operating expenses, cash flow, forecast variance, and outlook changes, supported by segment-specific operating metrics. For games, that could include users, bookings, digital mix, and releases. For devices, units, pricing, mix, and inventory. I would show actual versus budget and prior year, trends, and key risks. Every major variance should have an owner, explanation, and proposed action rather than just a red or green status. Discuss concise reporting, revenue, gross margin, operating income, cash, forecast accuracy, segment-specific drivers, leading indicators, materiality, trend views, and actions linked to each metric. Question 15. What Excel techniques are most useful in an FP&A analyst role? I use structured tabs for inputs, calculations, outputs, and checks so another analyst can follow the model. SumIfs, XLOOKUP, pivot tables, dynamic formulas, and basic scenario switches are especially useful for recurring reporting. I build reconciliation checks, flag missing data, and avoid hard-coding assumptions inside formulas. For management, I translate the model into simple charts and bridges. Accuracy matters, but auditability and ease of updating are equally important in FP&A. Be sure to mention clean model structure, SumIfs, XLOOKUP, index match, pivot tables, scenario switches, error checks, charts, sensitivity analysis, and transparent assumptions. Question 16. How would you use Power BI, SQL, or another data tool in FP&A? I would use data tools to reduce manual reporting and connect financial actuals with operational drivers. For example, SQL could join sales, product, geography, and ledger data, while Power BI could provide drill downs from consolidated results to business unit variances. I would first confirm source ownership, metric definitions, refresh timing, and reconciliation to the general ledger. Automation should improve control and speed, not create an impressive dashboard with unreliable underlying data. Focus on automating recurring reporting, joining financial and operational data, validating source systems, creating drill downs, preserving definitions, and using tools to improve decision quality rather than add complexity. Question 17. How would you handle a business partner who disagrees with your forecast assumptions? I would first understand the operating rationale behind the partner's assumptions and clarify whether we disagree about data, timing, or judgment. Then I would bring driver-level evidence, such as historical conversion, pipeline data, pricing, or capacity constraints, and model alternative scenarios. If uncertainty remains, I would present a base case and range rather than force false precision. I would document the agreed assumptions and escalate only when the risk is material and unresolved. In your answer, emphasize listening, fact-based challenge, driver-level evidence, shared definitions, scenario ranges, documented assumptions, escalation only when necessary, and preserving the relationship. Question 18. Tell me about a time you found an error in a financial analysis. In one reporting exercise, I noticed that a monthly variance did not reconcile to the source ledger. I traced the issue to a duplicated data extract caused by overlapping date filters. I quantified the impact, corrected the report, informed the reviewer before distribution, and reran all control totals. Afterwards, I added a duplicate record check and a documented refresh procedure. The experience reinforced that investigating unexpected results is as important as completing the analysis quickly. Be sure to structure the example with context, detection method, financial impact, corrective action, communication, root cause, and a control implemented to prevent recurrence. Question 19. How would you prepare a business case for a new Sony product or content investment? I would start with the customer proposition, market size, competitive position, and expected adoption. The model would include units or users, pricing, revenue timing, development, manufacturing, licensing, marketing, support costs, working capital, and cannibalization. I would show base, upside, and downside cases, calculate returns, and identify the assumptions that matter most. I would also define launch KPIs and review gates so the investment can be adjusted as evidence develops. Discuss market opportunity, customer demand, pricing, volume, development and marketing costs, cannibalization, launch timing, cash flows, scenarios, strategic fit, and post-launch measurement. Question 20. How would you use sensitivity and scenario analysis in an FP&A model? Sensitivity analysis shows how results change when one driver moves, such as volume, price, FX, or cost inflation. Scenario analysis combines assumptions into coherent base, upside, and downside narratives. I would quantify effects on revenue, operating income, cash flow, and key ratios, then identify thresholds that require management action. For example, if lower adoption makes a project cash negative, that becomes a decision trigger. The analysis should support choices, not simply produce more numbers. Focus on identifying key value drivers, changing one assumption at a time, combining coherent cases, showing impact on revenue, profit, and cash, and communicating decision thresholds clearly. Question 21. How would you compare performance across Sony's different segments? I would compare each segment using consistent definitions while respecting different economics. Revenue growth, operating margin, cash conversion, return on invested capital, and forecast accuracy are useful group-level measures, but their interpretation depends on business model and investment stage. I would also separate reported performance from currency and one-time effects. A content business may be hit-driven, while a network business is more recurring. The analysis should explain drivers, not rank segments mechanically. Make sure to mention differing business models, margins, growth rates, capital intensity, recurring versus hit-driven revenue, common definitions, allocation issues, and avoiding simplistic rankings. Question 22. How would you incorporate seasonality into a Sony forecast? I would analyze several years of monthly or quarterly history and identify recurring patterns, launch effects, holiday demand, major content releases, and promotional periods. I would separate true seasonality from unusual events, supply shortages, or prior year comparisons. For a product business, I would connect the sales forecast to inventory and channel timing. For subscriptions, I would model additions, churn, and billing patterns. I would then validate the phasing with commercial and operations teams. Discuss historical monthly patterns, product launches, holiday demand, release schedules, subscriptions, promotional periods, inventory build, comparable year distortions, and avoiding simple straight-line extrapolation. Question 23. What would you do if operational data and financial data did not reconcile? I would not immediately adjust one dataset to force agreement. I would first compare definitions, reporting periods, currencies, organizational scope, and recognition timing. Then I would trace samples from the operational system through interfaces and ledger mappings, checking for missing, duplicated, or late records. I would quantify the difference, involve the appropriate data or accounting owner, and document the resolution. Until fixed, I would disclose the limitation and avoid presenting false precision. In your answer, cover definitions, timing, scope, mapping, cutoffs, system interfaces, duplicate or missing records, materiality, source ownership, and documenting resolution before reporting. Question 24. How do you prioritize when several senior stakeholders need analysis at the same time? I prioritize by decision impact, deadline, materiality, and dependencies rather than by who asks first. I clarify the decision each request supports, estimate effort, and communicate a realistic delivery sequence. For urgent work, I may provide a controlled preliminary view with clearly stated limitations, followed by a complete analysis. I protect critical quality checks and escalate genuine conflicts early. That approach keeps stakeholders informed while ensuring important decisions receive reliable information. Be sure to mention business impact, deadlines, dependencies, effort, materiality, transparent communication, minimum viable analysis, quality controls, and renegotiating timelines when priorities conflict. Question 25. What would make you an effective FP&A analyst at Sony during your first year? In my first year, I would focus on mastering Sony's reporting structure, systems, accounting processes, and segment economics. I would deliver recurring reports accurately and on time, then look for practical improvements in automation, controls, and variance explanations. I would build relationships with finance and operating partners so I understand the drivers behind the numbers. By year-end, I want stakeholders to trust both my analysis and my judgment when discussing forecasts, risks, and opportunities. Focus on learning Sony's segments and systems, building trusted relationships, delivering accurate recurring reporting, improving processes, understanding business drivers, developing forecast judgment, and communicating insights concisely. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.